I'm your host, Ziewiecka, and today we're talking about something very that every company is thinking about: investment efficiency. What makes a factory not just functional but profitable? What kind of decisions save money long term? And how do we know they're the right ones before we even break down ground? Smart factory design doesn't just build systems, we build long term value with detailed economic analysis and data driven strategies. We help our clients invest wisely. Here to walk us through it is our founder and CEO, Alexander Stepinski. From a client's perspective, why is it worth investing in a smart factory design solution?
It's really to maximize your return. It's that simple, and also there's other drivers like it might be a challenging area for labor that you don't have the skilled labor to execute the manufacturing process. You have to go with a smarter solution with higher automation levels. That reduces the skilled labor burden. It could also be that logistically it's a challenged area, or regulatorily it's a challenged area. So this concept of a smart factory, there's many pillars to it. One is the sustainability aspect. One is the automation aspect. One is the logistics. So like we may even add some vertical components of the supply chain into a factory. Some clients add assembly. Some clients have their own equipment fab. These are things that we can incorporate vertically, so they can customize things of their own and whatnot, and be more self-reliant, not so supplier dependent.
So it's not just about having high-tech machinery. It's about like aligning the investment with a clear return. And that brings us to a big difference. What makes our approach different from traditional factory design? How does our offering differ from a traditional factory setup or equipment provider?
So the classic way you build a factory is you make a plan, but generally there's some reference, right? You're typically not doing something wildly different from what other people do. So you end up getting a lot of convergence with factory designs, and the only differentiation becomes like the specific types of equipment you select or the people that are in the factory, and that's the basis for differentiation between companies. So what we do is we do an engineered approach. So we use three techniques very heavily. The biggest is axiomatic design, where we look at cross-domain variables, how stakeholder requirements, functional requirements, design parameters, process variables all cascade to each other. We make sure that this flow of connection between the different domains is decoupled, so we don't have conflicts with one machine trying to do two different things at the same time. It's jack of all trades, master of none type situations. And in some case, you want the jack of all trades. It's really a trade space. We evaluate all of these things, and we determine what's the optimized investment. We also look at Taguchi methods. So we have to have variables that we can easily control without noise, so that when you have a smart factory, you have to be able to measure things and then tune variables and get the expected result, that you desire. So you can't have poor analytical methods that have poor signal to noise ratios, and then you're just reacting to noise all the time, because you're not going to have good recipes. You're going to have product variation, and that's not a smart factory. That's a traditional factory. When you have poor controls, it's just all more automated, maybe. Okay, so it's at many levels. It's the controls. So you measure something. Typically in a smart factory, the controls are an order of magnitude better in terms of capability and number of controls often, because you have to be able to tune these things with machine learning or whatever schema you come up with. And that's the big difference.
That's a big shift. Like, we are not just installing tech, we're like creating strategy. So like
new architecture.
Yeah, new architecture. And the part of that strategy and new architecture is that analysis that comes before the project even starts. So can you walk us through our economic analysis process before we design or build anything?
before we design or build anything, the big focus is capital efficiency, operating costs. So CapEx efficiency, operating cost long term, and then sustainability of the business plan. So CapEx wise, we tend to have a higher CapEx, lower OpEx model. The traditional model in the industry is low CapEx, mid OpEx. And this is kind of where everybody converged, and that's where the market sits. What we found is that the factories that we've designed that had a target product that we knew what we were going to build, these ended up being higher CapEx but extremely low OpEx with ROIs of only a couple of years. So this is where we focus on this kind of a business model. So it turns into and it's also low labor. So it turns into a trade space of capital equipment, getting the capital equipment specifications right, getting all the controls set up correctly, getting the interfaces between the equipment correct, getting the interface between product correct. So we map, we do something called the design structure matrix where we map the individual processes to products, the processes to each other, the products to people, the people to processes, all these cross-domain interactions. And we define the interfaces, all those interfaces. And then we go and those interfaces have specifications and costs associated with them and risks associated with them. Mm-hmm. And we map out how many people we need for a given process mix. It's a probabilistic model. And it's a lot of detailed statistic specification. We also throw some Six Sigma in there as well. So it's after your axiomatic design to Gucci, we throw in the Six Sigma, and that's how we approach everything.
So I love how precise that is. It's like not guesswork. And what kind of data or metrics are we actually looking at when planning?
It all comes down to the financial analysis at the end of the day. So translating the technical domain into the financial domain, that's kind of what we do. Usually these domains are very separate. The financial people don't understand the technical side of PCB and vice versa. And our job is to bridge that domain and say, okay, so if you buy this, this is what this translates to. If you combine these pieces of equipment, this is what this translates to financially. Here are the risks associated with it. Here are the actions that need to be completed. What's the probability that we can complete them successfully? And then you map all this out and present it to the client. We do pro forma income statements. We map out the business plan for the next X number of years. Do operating models of different types, free cash flow. We estimate profitability. We look at pricing. We look at how pricing changes over time. We look at what are the next products that we need to build in this factory. Every different level. It's a living creature, a factory. Mm-hmm. You don't build it to make one product, then expect that product to be there forever unless it's some kind of a government effort. Mm-hmm. Yeah. You know, the challenge in the real market that's not the government market is being able to change over different products and not having huge NPI costs and still keeping the process efficient. So this is where we focus, is making sure the investment you make today is also valid X number of years from now. Yeah. And you can modularly improve it to retain your target financial condition as opposed to replace it all and start over. So that's what we provide. Mm-hmm.
So it's really about like clarity, showing the client in numbers what's worth doing and why.
And giving them reference checks and whatnot so they have confidence in the solution.
Able to predict. But there's also the question of what's really already in place. So how do we assess existing systems or equipment before proposing upgrades?
So I mentioned in a previous podcast the term Doctors Without Borders. That's kind of the biggest element. So you have to go and see what's there for data. Usually 80-90% of the time we have to run some test vehicles that we've designed to characterize the process to make sure it even needs to be upgraded. Because often you can go and find some procedural or MacGyver style solutions, some small retrofits that correct the problem without the need for a large investment. And it comes down to the fact that the process was never characterized in a way that you could identify these issues and develop your action plan and close it out. So that's the first thing we do. Sometimes we find that they're all easy fixes or small fixes, and sometimes we find there's a general problem. So if the factory hasn't bought new equipment in a while, it tends to be more of scenario B. Mm-hmm. If the factory has pretty new equipment, then generally it's something's just wrong procedurally, or there's some slight modification needed in general. I mean, it can go either way, honestly. I mean, you can still have to replace a piece of new equipment if someone bought the wrong machine. And it's like a political disaster for whoever did that generally. So that's, we characterize it with test vehicles, with audits. We go through the equipment and see what's the status of it all. Sometimes we'll ask the supplier to look at it and give us an assessment, tell us what the gaps are. And we're kind of the arbiter where we say, okay, because the supplier is always going to tell you to buy a new machine or spend money. And we kind of temper this a little bit.
Yeah,
you know?
yeah. So we're not just adding shiny new things. It's like we are maximizing what's already there and integrating it smartly. That's what makes the investment smarter, not bigger, but more strategic. So thank you, Alex. This really shows how deep the thinking goes before a single piece of hardware is installed. But there's one more piece to the puzzle, and that's due diligence. In the next episode, we will explore how smart factory design does global due diligence, making sure every project is stable, secure, and scalable. Don't miss it. That's next. Thank you.
Thanks.